Guys, the market is crashing big time this year, and your portfolio may be taking a hit. Let's look at this chart. This is 1 year, year-to-date chart. Look where the market has gone. We had this climb and then this fall, and this was June of 2022. People said we were not going to go lower than that date, and here we are today, lower than that date. If you've been watching Paul for any length of time, he said that the market is going to go lower, but it's not going to be that straight line down. It's going to be wobbly. You're going to have these rebounds up to these levels of the beginning of June. Then you're going to have these falls. We will have another rebound. So the question becomes, what should you be doing? Should you be buying or should you be selling? We believe that there's a huge opportunity here. But how do you find them? When do you jump in? What stocks are you going to pick? So guys, I'm going to pull up some major companies and just look at their 52-week highs and lows this year. You are going to find great companies falling into your ranges. Let's look at this. Apple, 52-week high and low, $183 and $129. Costco, $612 high, $406 low. Google, I mean, these are fantastic companies that you'll definitely want to own. $151 high, $96 low. Lowe's, $263 high, $172 low. Visa, who doesn't have a Visa card in their pocket? $236 high, $175 low. Undervalued stocks are going to give you a great opportunity to get into some really great companies. Now, why do we want to find these quote unquote undervalued stocks? Because we're looking for companies that have really great financials, good growth potential, good potential to withstand some type of recessionary environment, but they're going to be the first ones to recover. Companies that have fantastic cash flow, like a company like Visa, for example, or a company like Apple or Microsoft. These companies, are they going to get hit? Yes. I just showed you the 52-week highs and lows on Apple. They are going to get hit. I promise you that. But they will be hit less than companies that, say, don't have really great free cash flow, don't have great profits, are being diluted in shares. But they're also going to rebound faster because they have that financial stability to back them. Now, the question also becomes, how do we find these companies? You may be new to investing and saying, what is this guy talking about? Or you may be the person that is saying, hey, I want somebody to find 20 stocks for me. I go and buy them. My portfolio goes up. Everything is great. You are going to get in trouble if you blindly follow somebody's advice. That's why we have created this to be very simple. It is so simple that even a novice is going to be able to do this. I understand you don't have all the time in the world. You don't have time to sit there and read for hours on end. You don't have two analysts or researchers sitting there doing the work for you like some of these super investors. I'm going to show you the shortcut to that and an easy way to do it that you can do it just by yourself. What we have on our website up here in this toolbar is to click and go to 8-pillar search. We use different metrics to find different opportunities to buy stocks. We'll look at something like 5-year PE ratio, 5-year return on invested capital, how a company reinvests in themselves, revenue growth, shares outstanding, net income over the last 5 years, their debt situation that they're in. Do they have free cash flow and their price to free cash flow? These are the different things that I personally look for when I'm looking for companies. So to me, I like to say, when I see a company that is like an Apple, for example, has a 5-year PE ratio that's very high and a 5-year price to free cash flow that's very high, that tells me that they're doing everything else right except for their valuation. It means that their stock price is just a little expensive. So I'm going to come in here and I'm going to select 6 metrics. I'm going to select 5-year ROIC, 5-year revenue growth, net income of 5 years, shares outstanding, debt, cash flow. So the 2 I didn't click are the ones that I think are going to be expensive. PE ratio and 5-year price to free cash flow. Now let's click and see what stocks this spits out. And there you go. I am looking at some fantastic stocks just from narrowing it down a little bit. I have Qualcomm in here, Nike, Cintas Group, AutoZone, that's on my radar, Apple, Microsoft, Meta, Applied Materials, Texas Instruments, Home Depot, Visa, Johnson & Johnson. And this is just an easy way for me to just click a couple buttons, slow it down, and find these companies that kind of narrow it in for me and say, hey, I like Nike as a product. Why don't I go and look at that and see if I want to own that company and what price I want to pay for that? Let's find some other stocks. I'm going to come off of cash flow and shares outstanding and update this. Now look at this. You have companies in here. Snap-on. Let's see. Zoom. This is a company that I would not expect to see in here, but maybe they're coming into some type of value play. It doesn't need to be based on my screeners. You can customize this any way you want. United Healthcare Group. Healthcare is going to be a huge thing going into the future. Box, another great company that people are looking at all the time. Abbott Labs. Teradyne. This is another company that people are bringing up. Smith & Wesson. So you notice there's a lot of really great companies and a lot of really great ways to filter to find companies that you want based on the metrics that you want. So now the question is, you found some companies. How do you put a value on it? How do you decide what you want to pay for that company? I'm going to pull up here. I'm looking at Visa right up here in my top left. So let's click Visa again. I'm going to drop it down to 8 pillars. And you notice, what do you notice here? These are the two things that I excluded last time. 5-year price to free cash flow and 5-year PE. This tells me that the company has outstanding financials, and the only problem is that stock price. That stock price is a little high. Now it's a little high. Why do I think it's high? What price do I want to pay? Maybe I want to pay 120. I want to pay 110. How do I know that? Let's figure that out right now. We're going to jump over to analyst estimates real quick because I want to see what the analysts say going forward about Visa. They're looking out 5 years and saying, hey, in 5 years, they're going to have 15.4% earnings per share, and they're going to be still doing revenue growth of 12%. So I'm going to take these numbers and I'm going to go over to my stock analyzer tool. Stock analyzer tool lets me put in data based on 1 year out, 5 years out, 10 years out, as far out as you need to go. I'm going to do 5 years because I'm going to go with the analyst estimations. And I'm going to say, hey, what's my revenue growth going to be going forward? Let's look at it. Revenue growth going forward, they said it was 9%. I will give them that on the high side. Let me double check. They said 12%. So they said 12. I'm going to say 10 because I tend to be a little bit more conservative than analysts. 6% on the low side, 8% on the mid. And I'm going to explain these numbers right after I type them in. I will go with 45% low, 46% mid, 47%. That is their historic 10-year number. Free cash flow margin, I'm going to go with the exact same numbers. PE ratio. Now, what type of PE do I want to give Visa? They are a dominant powerhouse company. So I'm going to go in there and say their price to earnings should be 14, 16, and 18. I'm going to put in the same thing for price to free cash flow. And what kind of return do I want? Well, this company is not going out of business anytime soon. So I'm comfortable getting a 12.5% return on the low side and a 17% return on the high side. Now, when I click analyze, it's going to spit out a bunch of numbers. And it's going to basically say, based on the assumptions that I put in here, based on saying 6% revenue growth over the next 5 years, 45% profit margin over the next 5 years, with a PE of 14, with a price to free cash flow of 14, and expecting a 12.5%, what do I need to pay today? What do you need to pay today to make that happen? Let's click analyze. The current price is $179.27. This is telling me that based on those first column low-end estimates, I need to pay $86.62 per share. Now, if I want to go a little bit higher and say, hey, they're going to do revenue growth of 10% over the next 5 years. They're going to have a profit margin of 47%, aligning with their overall 10-year number. Then I need to pay $107.83 today to make this 17% return over the next 5 years happen. Okay, now that we know our number, what are we going to do? Should I write this down on a piece of paper and push it to the side of my desk? No, we made it very easy. You can click this plus sign right here, and what pops up is your watch list. I tend to put in here, if I want to pay $107.83 for this, I'm going to put my reminder, my watch list reminder, and maybe 120. So when it starts to get close, it gets on my radar. And you're going to get an email and a notification to your phone, to your computer, that's going to give you that alert at 120, and I'm going to put that in here right now. So I'm going to type in 120 below notify me. There, it's been notified. Now I'm going to jump over here. I'm going to click go to watch list. You guys notice I have 27 stocks on here. and we keep a ticker for you. 27 stocks of reminders that are going to pop up on my app, on my email, and I'm getting emails a lot more frequently right now because stocks are coming down. My target price on AutoZone, for example, $12.75. My target price on Restoration Hardware, $109. My target price on Microsoft, $144.50. These notifications will come directly to you based on the numbers that you put in. Now, how do you decide how many stocks you want to own? Some people like to own 5 or 6 stocks and they just concentrate their portfolio in that. For me, I like to diversify. I like to have 20, 30, 40 stocks. It gives me a little bit more margin of error, margin of safety coming in here. All right, let's come over here and let me show you guys the 8-pillar portfolio. So what this is doing is taking these stocks right here. You could put any stocks you want in here. Apple, Costco, Google, Microsoft, Home Depot, Lowe's, PayPal, McDonald's, AMD, NVIDIA, Amazon, and Starbucks, and putting them in and making basically your own ETF, your own exchange-traded fund. And this spits out all of this data is telling you the average of your whole portfolio, what it looks like. And to me, this looks pretty dang good. It's basically doing exactly what it said on Visa, Apple, Microsoft, etc. 5-year PE is high, expected, because the market is expensive right now, even though it's coming down. 5-year price to free cash flow is high, same exact reason. Everything else falls into line. So these companies that I put in my little portfolio here, they are fantastic companies that I will want to own one day, and I think you will too. Guys, I used to be in your shoes. I used to look at companies like Apple and NVIDIA and Amazon and just say, hey, the stock price looks really great. Based on what I don't know. Apple was at $30 one day, and I said, hey, this looks like it's cheap because it's $30, but I didn't know why I was buying it based on $30. Amazon. I think Amazon is one of the most overvalued companies in the world, but I used to own it because it just looked cheap to me. It wasn't $3,000 a share. It was $900 a share. And I said, hey, I have to own this at this point. If you don't know why you're buying a stock, you will not know why you are selling a stock. If you don't know how you are going to make money, you don't know how you're going to lose the money as well. I started investing when I was 14 years old. Lucky for me, I was just curious about it. Something that a lot of people came up to me, and a lot of frustration is out there amongst kids and parents. Why didn't I learn this years ago? I used to go to high schools and teach. Paul used to go to high schools and teach. So we at Everything Money created this community, created this software so that you would have a place to go because it wasn't being taught in schools. The purpose of this channel is to give you the freedom and the control over your portfolio so that you have the control for your future and your kids' future. Out of this channel being created, people started asking us for software. They were saying, Mo and Paul, what is that software you guys are using to value your stocks? So we created what is sitting right behind me. You've seen me demo a lot of it. I've really just scratched the surface. We have exclusive content that our members get every single day. We have a retirement calculator that tells you, do you have enough money to retire? In October, we have a high power stock screener that's coming that's going to be one of the best out there on the market. We also have this community right here where, listen, it's a lonely road out there. I know. I didn't have anybody else before I had Paul, and now I have all of these people in this community. It's endless chats of very like-minded people that talk about anything and everything in the world of investing. Look at this: defense stocks, crypto, food stocks, Forex, options. The lists are endless, and there's a lot of great members, and there is somewhere for you in the community. For those of you interested, let me show you what you get. Monthly cost, $29. You get a mobile app. So everything that I have on the screen, you're doing on a mobile app. 8 pillars, 30 years of financial data, the stock analyzer tool that I displayed, exclusive daily content that Paul and I record, and you pick the content that we record. It's not us deciding, it's you. Access to the both of us, real estate calculator, stock screeners, which I just showed you, retirement calculator, which is incredible, the community of like-minded investors, and you can cancel anytime. Guys, I've used Y-Charts, I've used Trading Economics, I've used Yahoo Finance. This is a better deal and for a cheaper price. Go find it at everythingmoney.com and join. And when you do, tag me, tag Paul. We'll be happy to greet you. We'll be happy to walk you through. Have a great day.
All of these together, guys, all of these tell me a story. What does it tell me about Microsoft? It's expensive. Now, obviously, if you watch our videos, the stock analyzer tool, which is phenomenal,